Welcome to The Explainer. Today, we're diving straight into the massive stakes surrounding Applied Materials ahead of their highly anticipated May 14 earnings call. Look, if you follow the semi industry, you already know they're an absolute bellwether. Practically every microchip we use today was touched by their tech in some way. Right now, heading into Q2 of their fiscal 2026, they're sitting right at this crazy intersection of unprecedented AI demand colliding with intense geopolitical and cyclical pressures. So let's unpack exactly what Wall Street is bracing for. 8.08%. That's the massive stock surge Applied Materials saw back on February 13th, right after that phenomenal Q1 print. That single day of trading, it completely validated the AI equipment demand narrative. It essentially proved that the billions pouring into AI aren't just software hype. They require physical, highly advanced manufacturing tools. And clearly, investors believe Applied Materials is the prime beneficiary of this massive physical build-out. Real quick, here's our agenda so you know where we're headed. 1. The May 14 setup. 2. What is Applied Materials? 3. The bull case. 4. The bear case. And finally 5. The final verdict. Section 1. The May 14 setup. Heading into Q2, the expectations are just sky high. Q1 was what we call a clean double beat, meaning they didn't just edge past estimates, they absolutely crushed them. Wall Street wanted $6.85 billion in revenue. They delivered over $7 billion. Earnings per share consensus was $2.21. They posted $2.38. And get this, that marked their fourth consecutive quarter beating Wall Street EPS estimates. So going into May 14th, the market isn't just hoping for a win. They want to see continued absolute dominance. The bar is incredibly high, with Q2 revenue guidance already sitting at roughly $7.65 billion. Section 2. What is Applied Materials? Before we get into those massive AI tailwinds, let's quickly reestablish what makes this company so fundamental to the tech ecosystem. They are literally the invisible engine behind the modern tech world, the largest U.S. semiconductor equipment maker. Think of it like this. Almost every single advanced chip on the planet, whether it's powering a giant AI data center or just the smartphone in your pocket, is made using their equipment at some point. They don't make the chips themselves. They make the incredibly complex machines that deposit thin films, etch microscopic patterns, and inspect silicon wafers. Without them, the digital age literally grinds to a halt. But, and this is a big but, you've got to understand how top-heavy their revenue structure actually is. Over 60% of their sales come from just their top 10 giant customers, titans like TSMC, Samsung, SK Hynix, Micron, and Intel. That means their fortunes are completely tied to the capex budgets of a very small, very elite group of megacorporations. If those giants open their wallets, well, Applied Materials wins big. Section 3. The bull case. Let's look at the upside, because the setup heading into 2026 is structurally incredibly bullish. A huge part of this is anchored by their upcoming $5 billion Epic Center in Sunnyvale. Slated for spring 2026, this massive 180,000 square foot ultra-sterile cleanroom is the largest U.S. investment in advanced semi-equipment R&D ever. But honestly, the real magic isn't the building itself, it's the partners. Samsung, SK Hynix, Micron, Advantest. They've all signed on as founding anchor partners. And these aren't just polite handshakes. These are multi-year co-development commitments that build a massive structural moat, basically locking in Applied Materials tools and processes through the rest of the decade. And the projected capital expenditure from hyperscalers, the Amazons, Microsofts, and Googles of the world, perfectly illustrates the multi-vector AI tailwind driving those partners to spend so aggressively. This spending is set to absolutely skyrocket, tracking above $600 billion in 2026 and expected to blow past $700 billion in 2027. Because Applied Materials makes the exact tools needed for AI accelerators and advanced memory, they are perfectly positioned to ride this massive $700 billion wave. Plus, the bull case isn't just about selling shiny new machines. They actually have a massive counter-cyclical financial cushion through Applied Global Services. This division pulls in roughly $5 billion every single year in recurring revenue. How? Simply by servicing an installed base of over 50,000 systems globally. We're talking spare parts, maintenance, software upgrades. This is huge because services margins are structurally way higher than equipment margins. So when equipment sales inevitably take a dip, that $5 billion acts like a giant shock absorber for their balance sheet. Throw in a couple more massive global trends, and the growth potential looks even wilder. First, you have advanced packaging. Essentially, the science of stacking different chips together like microscopic Lego blocks to boost performance. That creates a brand new addressable market worth over $3 billion. Then you've got global government funding. Between the US and EU CHIPS Acts, plus similar programs in Japan and India, there is over $200 billion in incentives flowing into localized fab construction over the next 5 years. And guess what? All those shiny new fabs need to be filled with applied materials equipment. Section 4. The bear case. All right, a thorough explainer means we have to look at the downside. And the major sticking point on the risk side is a staggering number. $2.5 billion. That is the estimated annual revenue loss they've already faced directly due to U.S. export controls restricting advanced equipment sales to China. It's just the harsh reality of the current geopolitical landscape. The massive fear here is the risk of a comprehensive U.S.-China decoupling. If those restrictions expand into other categories, it could carve an even deeper chunk out of their global sales. We also have to weigh their AI momentum against their heavy exposure to classic capital spending cycles. The semi-industry is famously cyclical, right? So the big fear on Wall Street right now is the synchronized CapEx cliff. Basically, if this current frenzy of AI spending normalizes faster than anyone expects, Applied Materials could hit a sudden wall of dropped orders. And history shows us that when these cycles turn, they turn violently. We're talking historical revenue drops of 30 to 40% in a single quarter when demand finally normalizes. It's also not just about losing sales. It's about margin pressure. In the mature node equipment categories, so tools for older legacy chips at 28 nanometers and above, they're facing brutal pricing competition. Aggressive regional players like Nora Technology and AMEC are turning out lower-cost alternatives. This puts Applied Materials in a really tough spot. Do they slash prices and kill their profit margins, or hold firm and risk losing market share in those legacy categories? Compounding all these threats is the sheer physical reality of what they do. They are not some nimble software startup that can pivot overnight. They face a grueling 12 to 18-month evaluation and qualification cycle for new tools. I mean, when you're building a machine that manipulates matter at the atomic level, customers naturally demand extensive testing before putting it on a live production line. But from a business side, that deeply limits their agility, making it super hard to quickly adjust capacity and staffing if the market suddenly shifts. Section 5, the final verdict. So, let's pull all this together and see exactly what Wall Street is weighing heading into that May 14th call. Ultimately, this is a story of two massive opposing forces colliding. In the bullish corner, you have unprecedented AI strengths. Investors want to see an earnings beat and confirmation that the Epic Center is right on schedule. But in the bearish corner, you have investors staring down the barrel of cyclical volatility and geopolitical limits, terrified that current demand is just borrowing from future quarters and that export controls are only going to tighten. As we wait for those Q2 earnings to drop, I'll leave you with the defining question for Applied Materials' future. Look, we all know the history of brutal boom and bust semi-cycles, but honestly, we've never seen a technological land grab quite like this current AI revolution. So will the massive AI tailwind actually be strong enough and sustained enough to completely overwrite the rules of historical semi-cycles? That is exactly what Wall Street is desperately trying to figure out on May 14th. Thanks so much for joining me for this explainer, and definitely keep your eyes on those numbers.